weekend all. Ira Epstein with your Spider ETF wrap-up. And this is Sunday, by the way, and this is the 20th of March, 2022. I'll probably go back to doing these on Saturday. I've been holding off doing the weekend reviews until Sunday because of the Ukraine situation, but I'm not seeing a lot of new news that is earth-jarring enough for me not to do this. At first, we were holding back because we didn't know what the invasion would look like, so on and so forth. It's certainly ugly. Thanks for the comments on which different markets you want me to cover. Starting tomorrow, we'll do Alibaba. I think it's important to go back and take a look at a Chinese market because the Chinese government is now relaxing everything that drove that stock and that tech sector down. Maybe this is the time to take a good fresh look at that. So we'll do that starting tomorrow. On Thursday, I'm tentatively scheduled to hold a live webinar with you. You'll get an invite if you're on my mailing list starting tomorrow. So that's where we're at. Okay. So over the weekend, I saw the Baker Hughes number come out Friday. No increase in rigs. There was an attack on Saudi Arabia by the Houthis. And they did hit two areas there, and from what I understand, the damage is done. It will affect some refinery capability, but there's enough oil in storage to make that up, according to the Saudis, while they repair the refineries. Possibly tonight at midnight in California, Chevron's going to see a refinery go on strike. Now, they do about 245,000 barrels a day in an area you don't need a strike in. Diesel fuel, I was watching Maria Bartolomeo this morning saying diesel there is running $10.45 a gallon in some areas. We have nothing like that in the Midwest, but that's dramatically crazy in prices. And then they're talking $8, $9 on other gasoline there. That's enough to stop you from driving. And remember, if you've ever driven there on the 405 highway, you sit forever. So California, time to leave those areas or start, you know, I realize how liberal you are, but maybe it's time you write Joe, you know, OT Joe, and tell him, hey, Joe, maybe we have to look at this pipeline issue and federal land issue and get people back to producing oil so we become an exporter that you can count on for other parts of the world. Right now, we're sitting here and we keep begging OPEC, do something for us. They're never going to help America. They're our enemy. Come on. Okay. When I look at mining, I'm still so friendly long-term, these different charts. If you take a look at a weekly chart on XME, the market's had a setback from the high. It got up as high on a weekly chart of 60.37, pulled back just over 10%. Nice little pullback. Now the question is, what's that going to look like going forward? When I take a look at the weekly chart here, with the swing line, we have higher lows, higher highs. That's still a bullish situation. The 18-week average of close is all the way back at 47.16. This current pattern doesn't look like it wants to get down there unless it gets back up over these highs and starts falling, which could then be a bit of a bearish pattern, contra trend, as the market is over the 18-week average. When you're over the 18-week average, even if the swing line throws a bearish pattern of lower highs, lower lows, I call it contra because the bias, which is the filter on the swing line, is still pointing up. Got it? When you're over the upper Bollinger Band, you're looking for buy signals. Under it, sell signals. What's stopping the market? I think it's crystal clear. The market got up to the upper Bollinger Band, stayed over it for about 4 weeks in a row, and then it got smashed. So we come here, week one of being over the band. Let's come over here, actually. You close 48.40. Week one of over 48.23, the Bollinger Band. Week two, you close to 49.40 to that 49.13. Week three, 51.77 versus 50.60. You rarely go beyond 5 weeks in a row of closing over a band. Week four, week five, and all of a sudden, you're right back. Week six, and you closed on it. That's rare. What's it a sign of? Immense strength. 5 is the norm. You rarely go beyond it. I mean, really rarely go beyond it. So it generally just says pullbacks. A lot of traders are going to be looking at this market trying to come into it. What else is happening? The slow stochastic, even on the weekly, Week one of trying to embed, that was last week. This is this week. Now we got to see if this week can embed it. If so, like I said, on the big breaks, I think you'll have a lot of people looking on a longer term basis to get into that market. On the bank index, to me, this is an area where the pros are going to sell short. Right at the 55.47, they'll have tight stops, in my opinion, probably around the 56.70, just over that level. If the market fails against this, they'll probably look at the 51.51 level as an area to come out of that trade. In the industrial sector, finally, the market turned itself back to the upside. Now, it's taken a long time. The market broke down, if you take a look back here on January 21st under the 18-week average, and it spent all this time up until now to get over it. The first challenge doesn't have to pick up and run to the upper Bollinger Band, but everything on the chart is bullish. I don't like that if you're a buyer at 102.20 on a weekly basis, you got to have a stop under last week's low of 97.01. It's only $5, but if you think of the percentages, it's about an 8% risk or so. In any case, I think you'll see the buying. I think the objective's 107.74 on that chart. In the energy sector, until the red line closes under 79, I think the market will find itself with buying opportunities, just like you're getting here, looking for the upper Bollinger Band. Get that settlement, I'll change my opinion and start looking for prices to return to the 18-week average of closes. Now, do remember that the daily chart is more the one that I look at to return to the 18-day averages. It pulls on the weekly, but that doesn't mean that on the weekly you lose the reading and you don't have the downside drift. Then I go to the daily to see how extreme should it get. It's one of the ways that I teach that. In the SPY, you can see how momentum's turning up, so I'm looking for the market to get back to the 451.45. Now, let's also talk reality here. Do you think there's any chance you're going to make new highs on SPY while all this is going on with inflation hikes, rate hikes coming at you, the war going on? I don't. So overall, I look at the market, it even go into an uptrend. I think it's very limited. I think it's a trap if you get bullish in the market because of the world events. I just don't see how the stock market can go up and make new highs. On the emerging markets, the market made a startling swing back. So a big exhaustion move under the market. Now you're fighting at the 200-week average. You could get up here to the bigger resistance at 48.09 to 48.91, and that's where the pros will probably probe the short side of the market. But that'll also take the market to get up there further away from an oversold condition that it's currently in. Trend is still down. GLD. So you're backing off. How many weeks did we have over the upper Bollinger Band? So if I come right here, that close was week 1, 2, 3, was it? Yep. 4, 5, and now you're down. This is what I expected on the other chart, but you can see it closed right literally at it. That's normally to be expected of the market. Now I'm looking for big support to show at 172.25 to 170.93, and that is because you have the pattern of higher lows, higher highs. I think that's where the buyers are going to show up if it can get there. If that drops, I don't see how the miners stay up. But the miners don't have as nice a pattern. You have a lower and low, higher high. I look for the miners to find support between the 100-week average and the 18. I'm certainly not bearish in gold in this environment. I'm looking for reasons and ways to get long on a better chart look. ARK, finally, they got a bounce. A good one. They had an 18% bounce this week. There's no magic to this. China is again pulling on what? On tech. They're loosening up. So this stock's heavily invested in things that go back and forth between China, technology, and where she's at and all that. And this could be a trade bottom in the market. If so, what you want to get through is this high, right through here, 71.38, and you want to lose the embedded reading. So if the red line this week is over 21 on the close, the odds favor you're going to go to 81.38. Now, certainly you watch it during the week because it doesn't take much at this type of reading to get that pop going there. But if I were a bear, I think I'm on the defensive all of a sudden. Amazon. Amazon's finding its legs under the market. It's no longer in a downtrend. Let me take you back like this. Here's your downtrend. Here you go to the Bollinger Band again. The odds of staying under a Bollinger Band are 5% of the time. The market never embeds resistance all the way back up there, but to get there, you got to break the pattern of this high. So now you have a lower low, higher high. I'm not saying I'm bullish. I'm no longer bearish. There's a huge difference. Apple. I'm looking for Apple here to flip itself back to the upside and get to the 167.59 level. And if it can clear 168.91, finally, I will say this break from the 180s has run its course, and now the market's going to try to go sideways to develop an uptrend that might be able to carry it further. That's something I'm looking at. Tesla. I know people are enamored with this, but you do understand the stock market, this particular stock, has gone from 1238 all the way down here to the 600 level. It lost 50% of its value. People talk to me like this stock, oh, it's never going to drop, it's great. I don't know. Maybe I just don't read right. But in any case, I would say a close over 950, 352 could be interesting. For bears, I think they came out, and I think they came out right here, to be honest. This is what I teach. I teach that the first time when you're not embedded, don't have the embedded reading in the stochastics, and you hit a lower band or an upper one, I think traders come out. They can always come back in and trade the market, but that's what I think. And now the market, if you can close over that 953, it will be even more of a signal that you've made a trading bottom. Is it a significant one will be the question. In TLT, bearish. Still lower highs, lower lows. You don't sell a lower band, but you certainly sell hard rallies until you lose that red reading. Got to go back over 21. So I put that all together, try to come up with ideas, and I do it for you at about 9 each morning. I start recording. Now, Monday through Friday, I review 40 some odd charts, mostly the day charts, and I do rotate stocks with the different ETFs. So the ones we're putting up here, folks, by my design, they're changing all the time, like in currencies. I'm going to add UUP this week. I know it already. So I'm always rotating this, but it gives you an idea as to where you're at with them. And the idea here is first thing in the morning, I'm going to bring to you fundamentals, what's moving the markets, what just happened in the U.S. markets and economic data, because by 9, the reports are typically out of the way. What's going on in the world markets. There'll be bonus videos that you get with your subscription to it. And the idea there is I want to be the guy in the morning that you're saying, hey, what's he think of this chart pattern? What's going on that he's thinking about there? So fundamental analysis, most certainly. Technical, yep. Be telling you what I'm seeing other investors do. Fundamentals, different perspectives with it. How do you get my info and how do you view this? It's simple. Just go to our website, go under the word research. It tells you how to do everything right there. I'm Ira Epstein. You have a great weekend, and I'll see you all on Monday.